Great. Thanks, Tim, and Happy New Year, everyone. Thanks for joining the call. Look, it's been a pretty busy time for us. We had a great announcement over the Christmas New Year period in terms of acquiring our joint venture company. I'll talk about that in a little bit of time. But jumping right into it, the space that we operate is clinical microbiology, specifically this issue of infectious diseases. So an example of infectious disease is something like a urinary tract infection. Many people have probably heard of that. Over 150 million of these UTIs occur every year here in Australia, and that kind of represents about $1 billion of cost to the Australian healthcare economy. The other kind of part of this infectious diseases is the rise of superbugs. So these are infectious diseases that are resistant to antibiotics. Or in other words, they're just not treatable. And so it's a really serious issue, this one. And the space that we operate in is a really exciting one. And it's absolutely ripe for disruption and desperate for automation. Looking at the next slide in terms of the market opportunity, this global issue of infectious diseases being increasing translates to obviously a large market opportunity, which as I said before, is really ripe for automation. Our customers are clinical microbiology laboratories all over the world. So think of laboratories that are in a large hospital setting, in addition to those private labs such as Sonic Healthcare, which is a fairly well-known brand here in Australia. What we've done is segmented the market globally. So not every single clinical lab is a potential customer for our product, but it's those medium and those large labs. And there are about 13,000 of those globally. But if we look at just focusing on the markets that we've launched in globally already in Australia, US, and Europe, that represents a market or addressable market of over 2,000 labs. And you can see some numbers on the screen here. As we get the penetration rolling through that, it represents a fairly significant sales opportunity for our product. And on our product, the next slide talks about how we are absolutely leading the way in digital microbiology. There is no one else who is providing this level of automation such as we are. And so what we've done is developed a system we called the Automated Plate Assessment System, or APAS for short. It's a single instrument, but importantly, it's able to read multiple of these infectious diseases. So I mentioned the UTI as an example at the start. So that's urine screening, obviously. But not only that, we also have another module for MRSA, which is the screening of golden staph. I mentioned superbugs. We're also working on a module that looks to identify antibiotic resistant organisms. And so it's this suite of infectious diseases. We've got a single product, multiple analysis modules. That's the software that we've developed. And we've gone through all of this process of clinical trials, burden of proof, getting those regulatory clearances in place. And from a commercial perspective, we've sold 6 already around the world, and importantly, appointed leading channel partners who have put their brand behind our APAS technology. The next slide talks a bit about our cutting edge kind of AI platform. Like I said, no one else is doing what we are doing, and our AI algorithm is patent protected. The whole, we've got a family of 4 patents around this thing. It's protected. And I think the picture on the slide here is a really great representation of how APAS works. So we're clearly taking a photo of the plate, and what we've done is that we've trained the algorithm to interpret the various colonies and look to separate the detection of various colonies, which is what the bottom part of that image there on the screen looks to do. And it's super exciting, and like I said, completely unique. In terms of the clinical proof, well, that's been done. And so the technology works. It's at least as accurate. In fact, our clinical studies show it's more accurate than a scientist, and we're able to do it also 3 times faster. Next slide talks about kind of the roadmap and the journey that we've been on. It's been a long journey. We've been at this for about 10 years now. But I think importantly for investors looking at this from a value perspective now, it's a significant de-risked value opportunity. The important regulatory clearances are in place. You have to get a regulatory clearance in order to sell your product. We have a commercial product. We've generated commercial sales already. More recently, we've done the heavy lifting in terms of appointing key opinion leaders in Australia, the US, and in Europe. And we've gone through an extensive due diligence process with giant organizations, Beckman Coulter and Thermo Fisher, who've ultimately assessed the technology, assessed the market opportunity, and have signed up to be partners of ours. And so really the key message here is that we've established those critical building blocks from both the technology and even this early commercialization element to be able to start generating some real benefit for our customers and also for our shareholders. Talking about Thermo Fisher and Beckman Coulter, these are large global giants. And importantly, they are household names for our customers. So their brand reputation and the trust that our customers have with them is just impossible for us to replicate. And it's always been part of our strategy, in fact, to appoint distributors in each of our key regions. In both cases, you can see the picture kind of demonstrates the fact that our product is complementary within their existing portfolio of microbiology products. And that's really important, because you look at these big companies that get appointed as distribution partners, and there's many examples of where we struggle to keep the focus. But in this case, it's a complementary product within their existing portfolio, and therefore they're really motivated to sell APAS. This next slide talks about this transformative acquisition, which I mentioned at the start. I'm really, really excited to announce that we have acquired a joint venture company that we own 50% of. We now own 100% of the company. And think of it really as though we're kind of buying back 100% of our own product, our own technology, at really what is the perfect time. I've had discussions with many shareholders and potential investors over the years who've told me they didn't like the structure of a JV. It's complex. And really, frankly, many of them are known to fail. Well, in this case, our JV hasn't failed. Our JV partner has now invested significantly in LBT through the issuing of predominantly shares and look to benefit in the upside on a go-forward basis. But importantly, the structure is simplified, and from a financial perspective, we're now getting 100% of those revenues, and importantly, look to improve our time to cash flow break even, a really critical building block milestone. Next slide talks about this 2,000 lab addressable market, and it kind of puts that global footprint on the one page and demonstrates that we've got Beckman Coulter working for us in Europe, and we've got Thermo Fisher working for us in the US. We've established key opinion leaders, and that's so important. And we've got a key opinion leader in each of those regions, so we're out there advocating for our product. And we've also now got the backing of Thermo Fisher and Beckman Coulter behind us. We've got a sales cycle that's a long one. It's typically over 12 months. And so what we've recently introduced this last quarter is a metric of an advanced sales opportunity. And this indicates that the customer is at a point where they're going through a product evaluation, or they're at the contracting phase of that sales process. And the intention here is to show our shareholders that we're making progress in the market, where we're seeing actually improved sales velocity of those opportunities, and noting that the sales cycle is a long one, but we're active and we're making progress, and the feedback from customers remains really positive. The next slide looks at our share graph and kind of our corporate overview. We're primarily a retail shareholder. We've had a fairly stable top 20 for some time now, and post-acquisition, we'll have about 6.4 million in the bank. That includes the 800,000 for the R&D tax incentive. And importantly, the slightly increased quarterly cash burn excludes all revenues, excludes all sales. So it represents our most conservative, or if you like, worst case position. And obviously, as sales progress, that cash runway further extends. So look, wrapping things up, there really is no better time to be in microbiology diagnostics. I think we've seen with COVID and the labs that have been difficult to get into over the last 12 to 18 months, just because everyone's distracted with COVID testing, there's an absolute need for automation in these laboratory systems. And while we're not a virus, we're not a product in the virology space, so we haven't got a COVID application. What we are absolutely seeing from our customers is more interest and recognizing the need that there are limited skills. So we have a skills shortage and we need automation. And APAS is perfect for this infectious diseases space that we're operating in. If we look over the next kind of 12 months, we are going to deliver on additional capability, which is going to further increase the clinical utility of the instrument. We're going to build on the sales that we've already delivered to date in a more opportunistic way through the Thermo Fisher and Beckman Coulter relationships. And not only that, now that we've got 100% ownership of this joint venture company, Clever Culture Systems, we do that receiving 100% of those proceeds. So look, it's a really attractive opportunity and investment thesis, I think, for shareholders to consider at this point.
Thanks, Brent. Always a good presentation from you, always bang on time. Congratulations on that acquisition, because I do know what it's like when you own kind of half an asset. So it's a cleaner structure for institutional shareholders in particular. Can you give us a little bit of colour on what your customer currently uses by way of a product, how your pricing compares to peers, and at what point do you get to break even? How many machines do you have to sell, for example?
Yeah, no, good loaded question there. I'll start by what's the current standard of care? Well, everywhere around the world, you have a scientist that is looking at these culture plates manually. So there is some systems, big systems that provide some imaging, but still requires the microbiologist to look at it on a screen. But predominantly in most labs all around the world, you have someone sitting at a workbench, picking up a plate and visually looking at it and keying all the information into the laboratory information management system. And so that's where we saw there was an unmet need, right? Because it's a hugely manual process. And really interestingly, you look at things like MRSA, which is the staph identification, you have a really high negativity rate. So about 97% of all of these routine swabs for MRSA are negative. And so you've got someone looking at this plate, really, going through what is something that's fairly routine. Talking around other products that are in the market, we don't directly compete, but there's another product which is a total lab automation solution, and these are kind of $5 million plus instruments. Ours is $300,000 US, so it's a significantly different kind of category of lab. They're for the super large labs, and they provide automation of the front end inoculation and streaking. They image the plate, but they still require the scientist to look at that plate on a screen. So there's no automatic release of images, and then there's some ID/AST. And so we really stand alone from a competitive perspective in the space that we operate. Your last point around break even, look, it's a really good question. We haven't put forward kind of forward-looking forecasts around our sales process. And so, look, it's a difficult one for me to kind of ask, to answer succinctly, other than obviously by receiving 100% of the proceeds for the instrument and the analysis modules. So there's the upfront 300,000, and then there's an annuity over the useful life of the instrument, represents a higher earnings, which we expect, like I said in the presentation, to get us to a break-even point quicker.
And obviously that is expensive. 300,000 sounds like it's a lot cheaper than the competitors. But is there pricing plans put in place in terms of for payment of those sort of products?
Yes, yeah, there is. Look, we had them before the appointment of Thermo Fisher and Beckman Coulter in terms of leasing models and the like. And I think it's reasonable to assume that both of those organizations have a number of financing and procurement options and master services agreements with large organizations in Europe as well as the US that allow that upfront CapEx to be one that can be overcome as we start kind of generating placements in these regions. And that's why that advanced sales opportunity metric that we're trying to inform shareholders is really important, because it represents a really high likelihood of a sale conversion occurring. The challenge that we have is just the procurement cycle when the budgets are unlocked, and we're seeing some variability of that as COVID kind of goes through these peaks and troughs in various countries globally.
And can you give us a little bit more colour? There's a group of questions based on margins and how that margin is potentially diluted when you work with distribution partners. Yeah, so clearly we want to pass on some margin to the distributors. They need to be incentivized to give incentives to their sales team. I think broadly speaking, you can kind of think at 300,000 end user price, it's kind of like a third. Rough, very, very broad numbers. It's probably a bit better than that from our end margin perspective, but in simple terms, that's probably the easiest way to look at it. And a question here on Sonic Healthcare, which you mentioned. Are they looking to purchase additional equipment? Is there a further opportunity with them?
Look, we're really close with Sonic, who are headquartered here in Australia, in Sydney. And so we have discussions with their global team. And look, we sold 2 instruments to their key lab in London last year, the Health Services Laboratory. So they're a really prestigious lab in London. They purchased 2 instruments. So we certainly see Sonic as a great opportunity, and that initial placement there in London has allowed us to have conversations with their other labs on a global scale.
And finally, Brent, there's a question here. In your recent AGM presentation, you said that technology and partners will drive greater market adoption. Can you elaborate a little bit more and give investors a taste of what to expect in 2022 RE sales and sales growth?
Yeah, look, all I'll say, we're going to do better than we did last year from a sales perspective. We know that investors are now really trying, with these building blocks that we've delivered, with the distributors being in place, now with 100% ownership of the joint venture, we know that shareholders want to see sales. All I can say is that, look, we have a really positive outlook for 2022, and we certainly appreciate that shareholders, once they start seeing some sales, that'll be a real catalyst, we believe, to build a momentum and positivity in the words that we've been saying for some time. So watch this space.